David, it's so nice to see you again. It's been a couple of years, but hopefully we're a bit older and a bit wiser as well.
Absolutely, Lucia. It's a great pleasure to be on your show again. Actually, even though it's a different platform, which I believe is a better platform, because as you know, mainstream media has been losing out in a very big way.
Well, David, a pleasure having you on board. So you recently put out your 2025 predictions, and coming to the end of a year, we all always like to look ahead and see like what's to come. So could you just kind of run through some of the main themes that you think 2025 has in store?
Yeah, I think for me, the big theme, the big overarching theme, investment theme, I think of 2025 is what I call world peace. And why world peace, and why does it even matter to investors, you might ask? I mean, there's no doubt in my mind that the geopolitical fracturing of the past 4 years under Biden has largely shaped the macro environment. I would argue the geopolitical fracturing that started under Biden is the reason behind the outperformance of the US economy, the outperformance of the US stock market, the fact that the dollar is trading at a 40-year high. There's no doubt. Like, I think by now, like anybody who's in the investment business ought to know, should take that as a given, that this fight for US hegemony that has definitely intensified under Biden has found the US as being the biggest beneficiary. And in my humble opinion, that basically honeymoon period for the dollar, you might ask, is coming to an end as we switch essentially direction in terms of foreign policy, under Trump 2.0. I mean, I don't have to tell you, and I think by now, I think it's very clear that Trump wants peace. And I think he really means it, because at the end of the day, this is not just about paying lip service to peace. This has so much more, because Trump talks about the military industrial complex in the US, wanting to fight essentially forever wars in order to not only strengthen the US hegemony, but also to feed this gravy train that has become the $1 trillion defense budget for the US. That's, 50% is going to defense contractors. Trump understands that the only way you're going to actually bring an end to fiscal profligacy, the only way he can avoid a fiscal crisis, I would argue, in the next 4 years, is by going after defense spending, which is now the biggest part of discretionary spending, as you know. And in order to do that, he needs to basically bring the Ukraine war to an end. He needs to figure out how to talk to the Chinese again, and so on and so forth. So for me, Trump, basically world peace for Trump is not just a foreign policy objective, it's an economic objective. In fact, it's central to Trump's goal in terms of his economic plan. And I think from that point of view, I personally think, for me, world peace has 3 components. And then in terms of what they mean for markets, for investors. The first component, of course, is that I think, we're going to see the end of the Ukraine war very soon. I've been saying this for basically a while, that as soon as Trump gets in, the Ukraine war is going to be done. I mean, for lots of different reasons, which we don't need to go into right now. But needless to say, at this point, I think that actually Trump's got the year of both Zelensky and Putin. I think that actually Putin needs this peace as much as Zelensky at this point. I think if you look at how the Russian ruble has been doing lately, you know that the Russian economy is not doing well, especially with the slide in energy prices over the last 2 years. So I think there's a deal to be made. I think a deal to be made there between Russia and Ukraine, to me, in foreign exchange world, should be seen as being pretty bullish for the euro. Because there is no doubt the biggest loser of this war in Ukraine, which the US started, mind you, it was the US that left basically Russia with no choice but to invade Ukraine, because US wanted to basically drive a huge divide between Germany and Russia. And that's the way they went about doing it. There is no doubt the biggest loser of the war in Ukraine has been Europe. There's no doubt about that. This is the reason why we've seen the complete hollowing out of the German manufacturing. This is the reason why German manufacturers have been fleeing Germany to the safety of the US and even China for that matter, because of massive increase in energy costs. To me, I think that as much as I think the Germans, have been complicit in this war that's lasted too long and has killed hundreds of thousands of people, I think the bottom line is that there's an election coming up in Germany, as you know, in January. I think, regardless of the fact that I think, most likely we're going to get a continuation of the Grand Coalition, except with Christian Democrats as the head of the government, I think this peace negotiation between Ukraine and Russia provides Germany with an opportunity to pivot in terms of its relationship, Germany's relationship with, essentially, with Russia. I think better relations between Russia and Germany is going to be the only hope that German manufacturing has in terms of accessing cheap energy in order to remain competitive in the face of Chinese and American competition. So from that point of view, I think the euro is going to do better next year. But against which currencies you might ask, I think the euro is going to do better against the Swiss franc. I think that's a sort of the safer trade, to the extent that I think the euro, in that respect, just hold on one second. I mean, my phone. You can cut in and out. My phone just basically. Okay. So I think that, the euro is going to do better in 2025. And I think, the safer bet, of course, is that the euro is going to do better against the Swiss franc, especially after the S&P cut 50 basis points. It's very clear to me they want to basically put in the floor for euro Swiss. So I actually like euro Swiss, higher euro Swiss, as potentially a peace trade for Europe. Okay. And obviously, DAX will do very well in that environment. I think Ukrainian government debt, the 2034 Ukrainian government dollar bond probably can continue to rally if we do get this deal, because the US will have to dangle a lot of money in front of Zelensky for him to basically cooperate. I do think that some of the defense contractors in Europe, I think they're an easy sell right now, especially Rheinmetall, which I think is completely overbought. And I think that thing's got plenty of downside. So I think that's an example of a bunch of trades that will benefit from world peace.
Okay, you put a lot out there, David. So let me just get into some of the details a bit more. So your two themes basically for 2025. The first one is you think that there's going to be world peace or more peace than what we're seeing now, and the second theme is that we'll see an improvement under Trump, or Trumponomics is going to help to bring the polarization that we're seeing to mitigate that gap between the U.S. and Europe. Have I understood that correctly?
Yeah, I think that's part of it, but it's not just about Europe and Russia. I think really right now it's about the adversaries of the U.S., right? I mean, who are the adversaries of the U.S.? It's China, Russia, and arguably Iran. What I'm telling you is that I think that under Trump, I think there will be improvement in terms of relationship with Russia, and an improvement in relationship between U.S. and Russia will lead to an improvement in relationship between Europe and Russia. And to the extent Europe has been the biggest loser of the deterioration of the U.S.-Russia relationship the last 3 years, Europe should do better. Now, I think the China part is a sort of separate story, because China obviously is a bigger adversary for the U.S. And I think there's no question that it will be more difficult, I would argue, for Trump to really basically reach a comprehensive deal. But that said, I'm also optimistic there. The reason why I'm optimistic there is because I think the Chinese economy is struggling, okay? And I think at the same time, Trump understands dealing with China is not like what it was back in 2018. Remember, back in 2018, 23% of US imports came from China. Today, only 13% of US imports come from China. In other words, Trump can basically throw up tariff 50%, 60% on China. It's not actually going to raise that much revenue, okay? At the same time, you know what? Given that the bond market has becoming very, very nervous about any sign of inflation. In fact, if you go after China with tariff, you could potentially risk having to pay more on servicing U.S. Treasury, basically interest payment, than any revenue you're going to actually raise by tariff on China. That's why the China thing is not that straightforward. I think that the whole tariff war, the rationale is not quite as straightforward, especially given the fact that you have to remember, Elon Musk is now the second most important man, okay, in this new American administration. Elon Musk's biggest factory in the world is in China, which he claims makes the best, highest quality of Tesla and the most productive automobile factory in the world. He's now building the biggest battery factory in the world. China is Tesla's second largest market after. Do you think Elon Musk will want to see basically an all-out trade war between US and China? Very unlikely. In my humble opinion, it was very, very important, and I actually predicted this, that Lighthizer was passed over. okay, for the Commerce Secretary, or for that matter, Chief Trade Negotiator position under the Trump administration, because Trump wants to reset in terms of relationship with China. Now, this is not to say that U.S. and China will not remain as competitors, as rivals for the next 20 years. There's no doubt about that. But I think under Trump, you will see a more concerted attempt trying to find areas of overlapping interest to look for win-win outcome. And I think, for example, I actually think that, Trump could easily go back to his phase one agreement that was signed with China back in early 2020, in which the China promised to buy an additional $200 billion of US goods in 2020 and 2021. That never happened because of COVID. I think Trump can call up Xi Jinping and say, you know what, Xi, you still owe me $200 billion. I think, there are many ingredients on the table for a deal. And I think a lot of the chips are going to be off the table, but I still think, in fact, I think the fact that Trump invited Xi to his inauguration, I think that's a very, very strong sign that actually Trump wants to make this work. Now, I know there have been some reports that are unofficial, unconfirmed, that China's turned it down. I don't believe that's the case. I think China probably will not decide one way or the other until we're much closer to the inauguration, because you're going to have to assume, Louisa, the intense negotiation between U.S. and China, between U.S. and Russia, is going on right now behind closed doors. Because Trump is much more savvy than he was in 2016, to the extent that he's not leaving anything to chance. And he knows getting a deal before the inauguration is going to be so much easier than getting a deal after the inauguration. That's why you're going to have to assume that this is what is happening. And this is why I'm optimistic, because I think, in some sense, the fact that it's been very quiet lately tells me that negotiations actually progressing.
David, let me just ask you a bit more about inflation, which you brought up. Do you think we're getting inflation wrong? Markets are pricing in still rate cuts. Do you think potentially that we might see inflation go to, 5% as kind of a norm of a switch of the direction that we otherwise have been heading, namely downwards? And do you think that markets, they're going to react positively to this? Like, are we going to see a big sorry, let me do this over again. I got sidetracked. David, let me bring up inflation, which you brought up as well. Do you think that markets are getting it wrong? I mean, we've seen the predictions for at least 2 rate cuts to come, but is there a chance that inflation could be heading higher instead?
Listen, I mean, if you look around the world right now, I mean, inflation is not much of an issue, right? I mean, Europe inflation is taking a big dive. I mean, Japan inflation is going up, but it's stabilizing. In most of the emerging markets, Canada, I mean, inflation is going down. I mean, Switzerland, this is the reason why S&P cut 50 basis points. I mean, I think, in most parts of the world, inflation is simply no longer an issue. I mean, for one thing, because the economies are not doing well, therefore, output gap is opening up. That's why, this is the reason why wage growth is slowing as a result. Now, U.S. is a very different story, of course. Now, I think U.S. inflation, personally, I think, I suspect, let's put it this way. I don't think the Fed doesn't have as much scope to cut rates as other major central banks, because the economy is doing well. I mean, the economy, for God's sake, right now is growing at more than 3%. Like next year, I know consensus is looking for something like 2% and change, but I think the chances are we could actually see upside. But there's a reason why I'm not that worried about inflation in the US either. Again, this has to do with Elon Musk, who makes me very bullish about US Treasuries, at least the front end of the curve. That is, again, what I said to you at the very outset. Trump understands that he faces no political limit in his second term, but he faces one huge economic limit, which is the fact that interest payment on US government debt just hit $1.1 trillion annualized rate. And he also knows, unless the Fed is cutting rates aggressively next year, that $1.1 trillion interest payment is going to go to $1.5 trillion by the end of next year. I'm going to tell you this. If interest payment goes to $1.5 trillion by the end of next year, Trump can kiss all his campaign promises, tax cuts and everything else goodbye. This is the reason why Trump understands the best thing he needs to do is to keep the Fed on a rate cutting cycle. To do that, he needs inflation to be under control. And in order to basically make sure inflation is under control, he needs to basically take some basically pressure off the budget. Because as you know, the budget deficit has blown up under Biden, especially over the past year. As we go into the election year, they've been spending like there is no tomorrow. Elon Musk has a very important job. His job is to identify $500 billion of savings, of cuts directly from federal budgets, okay, already annually. I think that this is going to be the big story of 2025, which is I think the first half of next year, you will see spending cuts. You will see basically federal workers being laid off. I think that's going to help ease the basically labor market. That makes me much less worried about inflation. And therefore, it makes me think that the Fed can at least cut 2 times next year. I'm not saying the Fed is going to cut 6 times next year. I think right now what the market's pricing in terms of 2 times next year is fair. I think it's not a question of fair. It's the lower bound of a plausible range. So that's why I happen to be long the December SOFR contract, because I think that I'm buying basically a zero cost option, because I think the minimum the Fed is going to cut next year will be 2.
A number of fund managers I've spoken to recently have been long U.S. heading into to the election in the U.S., but not long enough. Do you think that long U.S. trade continues, or do you think that it's time to switch more to other markets? And what are your thoughts on some of the emerging markets? I know that many are looking closer at, for example, South Africa, Turkey, Argentina. Thoughts on this, David?
Yeah. So again, if you think about the U.S. outperformance story, which has been specific over the last 3 years, 4 years, especially in 2024, right? The backdrop of this U.S. outperformance, this is the reason why everybody and their grandmother is overweight the U.S., long the U.S., because U.S. has performed so well in the last 3 or 4 years. As I said before, there were 2 pieces, there were 2 factors behind the U.S. outperformance. One was, again, geopolitical polarization, which benefited the U.S. because the U.S. is far away from global conflict. U.S. does not depend so much on global trade. So slow down global trade didn't hit the U.S. that hard. And then U.S. allies were big losers. So Japan, Germany, everybody lost out. And then the BRICS. So U.S. stood pretty. So U.S. was basically this geopolitical safe haven, if you like. And I just explained to you that I think that's coming to an end under Trump. The second factor behind the U.S. outperformance over the last 3 years, of course, has been AI, right? AI has been a very specifically U.S. phenomenon to the extent that 90% of companies that are involved in AI, okay, outside China are in the U.S., okay? And basically this year alone, U.S. big tech companies are going to pour more than $200 billion into AI, which means the U.S. lead on the rest of the world when it comes to AI is also increasing. And this is the reason why everybody is chasing U.S. assets, because U.S. assets essentially is basically a play on AI, which is, as I said before, U.S. dominated by U.S. tech monopolies. Now, in my view, that is set to change in 2025. And again, I'm not reinventing the wheel. I mean, my specialties these days is looking at the intersection between economics, geopolitics, politics, and basic technology. I can tell you, the biggest risk to the market is what the Google CEO said a week ago. The Google CEO came out and said this, and it was completely ignored by the market. And honestly, I think the market is just, it's because it's so obvious. But the Google CEO just basically told us that 2025, we're going to see a slowdown in AI. In fact, he said that the low-lying fruit has already been plucked. To me, I think AI has created a huge bubble. Obviously, like all bubbles, there's always going to be a grain of truth in it. And there's no doubt there is a grain of truth about, generative AI is being a good thing and so on and so forth. But it has gone absolutely out of basically control. And at this point, if indeed the Google CEO is correct, and by the way, the Microsoft CEO pretty much just echoed his words last week as well. If AI slows, I think you're going to see a big problem for U.S. stock market. And in the U.S. stock market is the reason why, U.S. financial conditions continue to lose, even though with very, very high interest rates. So I think from that point of view, if AI slows and then the AI bubble bursts, I don't want to basically say, well, we're going to talk about 50% downside, whatever. Even just a 10, 15% basic decline in the U.S. stock market, I think potentially bring the U.S. economy back to earth. And I think against that backdrop, I think, the Fed will probably cut more than twice, and the dollar will be weaker. So that is
How
generally my
does
position as well.
Tesla
There are
fare in
two
this?
forces that work here. That will be bad news for the US dollar. World peace is bad news for the US dollar. And then basically the fact that AI is slowing in 2025 is bad news for the US dollar as well.
How does Tesla fare in this? And then we'll get on to your FX predictions. But how does Tesla fare in if we do see this AI slowdown, given Musk's new government role?
I think the market got it completely wrong. I mean, let's put it this way. Elon Musk, I mean, he got involved with Trump, not because he was trying to make more money. The guy is, he's already the richest man in the world. I don't think he saw Trump as being a door to his riches, okay, whatever it is. So I think from that point of view, I think the fact that Tesla stock has rallied so much since the election makes no sense to me, okay? The fact is that if Trump were to do anything for Tesla, he will be immediately attacked as being basically, engaging in favoritism, corruption, and that kind of thing. So neither Trump or Elon Musk wants to go down that path, believe me. So this is not an issue. So from that point of view, the fact that Tesla is trading at a 120, basically PE, versus even Google trading at 20, that makes no sense to me. Because right now, the issue here is this: EV sales is going down worldwide, except for China. Okay. And so from that point of view, Tesla basically sales is basically slowing. The earnings is basically slowing. Yeah, you're talking about robo-taxis as potentially some kind of vision for Tesla in the future. But robo-taxi, let's be honest, even Musk is talking about 2027. And by the way, 27 or not, the fact is that Google's Waymo is way ahead of basically Tesla when it comes to autonomous driving. And if Waymo, under Google were to decide to license the technology to all the car makers, that means all the investment in Trump that basically Tesla is sinking into this autonomous car business could potentially blow up in this space. So I definitely think Tesla is basically a big bubble, the biggest of them all. But of course, I mean, again, I'm not sitting here telling you to go short Tesla because Tesla for retail investor is a religion. And I have a lot of respect for Elon Musk. But I think even with his genius, I don't quite see, Tesla deserving the current lofty valuation, that there's no way. I think Tesla from that point of view could potentially go down in a very big way next year.
Okay. David, let's move on to some of your FX calls. I see you're short the dollar against the Mexican peso. Why?
Because I think, listen, as I said before, I think we will see an improvement in U.S.-China relations under Trump. But you know what? Timing, who knows? Okay? Because things could get worse before they get better. I don't know. I think the probability of tariff is lower than what's priced in the market. I have a more constructive view about basically U.S.-China relations than the market, certainly, at this moment. Therefore, from that point of view, the fact that the dollar is trading at a very high level, which reflects a very, very sort of bellicose Trump, a violent Trump for that matter, I think that's difficult to justify. Now, in terms of, obviously right now, the big story of the last 2 weeks is that leaders, of foreign countries are literally lining outside Mar-a-Lago trying to basically get through Trump. In fact, it's also funny. It's almost like high school. It's like peer pressure. And then everybody is trying to cut the line, trying to get to be the first one to get to Trump so that they can get the best deal, because nobody wants to be left behind. People think that whoever's going to be left behind are going to get the worst deal from basically Trump. Now, in my humble opinion, the first country that's going to get a deal from Trump is going to be, of course, Mexico. Okay. Now, there are a lot of reasons for this, but not least of all because what a lot of people don't fully appreciate was the fact that the outgoing Mexican president, AMLO, had an incredible friendship with Trump. In fact, I think, no basically Mexican president had the kind of relationship that AMLO had with the US president as was under Trump. Trump will call him up over the phone, AMLO will call him up over the phone on their own personal initiative. AMLO was the reason why Trump basically was able to solve the immigration issue, by the way, because AMLO agreed to basically process the asylum seekers in Mexico at the time. Now, and then, of course, the relationship between AMLO and Biden has been terrible. AMLO hates basically Biden, and for all the good reasons, right? So from that point of view, to begin with, AMLO is still the kingmaker in Mexico. If you look at, what Claudia Sheinbaum, the president, basically Mexico today, who's a protege of AMLO, what she's been saying and doing of late, it is very clear they understand Trump. They understand how to basically, move the needle with Trump, right? Just last week, Mexico, all of a sudden, out of the blue, seized 1 ton of fentanyl, okay, which is an historic record, basically, seizure that's worth 200 million pills. I mean, just think about that. A week after, Claudia Sheinbaum had a conversation with Trump. Trump needs South in Mexico because Trump deportation drive will rely very much on the cooperation of Mexico to agree to take in these deportees, because otherwise we're going to have to send them somewhere. So I think that Trump will have to be very nice to Mexico if he wants to solve the border issue. And the Mexican will make it very easy for Trump, for him to be nice to them. And I think the renegotiation of USMCA is probably not going to be as big a deal as people think. Yeah, Trudeau is an idiot, and that guy has to be voted out, and he will be out of there by next year this time. Trudeau is going to lose by a landslide. And then the conservatives, once they get into Canada, they're going to be in a hurry to do a deal with Trump. So I think in general, there's a lot of basically, I think if you look at the chess pieces on the board right now, all suggest that actually doing a deal with Mexico, to me, is going to be sort of the low-lying fruit. And that I would think is going to happen sooner rather than later. And that, of course, should be viewed as being very constructive for the Mexican peso. Beyond the carry, I can see another 5% of appreciation, maybe even 10%. Again, these days, I don't make 12-month forecast, that kind of thing, because that's ridiculous. I think long-term, I trade very short-term. But I can imagine, in the first quarter of next year, if I have to guess which is going to be the best performing currency, I can see the peso being one of them.
I think the peso. And what else? I mean, when you look at the euro, when you look at the yen, the pound as well, what are some of your predictions for 2025 there?
I think, listen, as I said before, I think I like Euro Swiss higher because I want to buy the euro because I think there will be peace, in Ukraine and Russia, and that should be constructive for basically Europe. But obviously, Europe's got a lot of problems. So this is why you want to basically express this view in a sort of safe way, so you don't make a big, terrible mistake, basically, because that's the situation. That's how bad Europe is as a basic even continent. But my humble opinion is that I think Euro Swiss looks like we now have a bottom that's put in by the SMB. And I think from that point of view, I feel very comfortable that Euro Swiss is going to go higher. As I said before, also, I like Korea. I think Korea actually good. Korean won is trading at almost all-time weak, basically. Certainly, we haven't seen Korean won this week for a very long time. A lot of it has to do with the fact that Korea has been the biggest loser of the deteriorating relationship between US and China under basically Biden. Because remember, Korea's largest trading partner was China. It still remains China. That's basically Korea's biggest export market. And I think from that point of view, any improvement in relationship between US and China should be viewed as being reasonably constructive for Korea, especially given that Korea, ironically, Korea is a major, semiconductor, powerhouse, right? Samsung and basically Hynix are both Korean companies, but they have completely been overlooked in this whole AI thing. Almost all the oxygen has been sucked out of basically semiconductors by NVIDIA. So I think if we were to see a normalization of the tech world, I think Korea could potentially actually do pretty well, especially now we finally have resolved the political uncertainty and move on.
So in summary, for the FX markets, your favorite trade would be to go short dollar, long Mexican peso.
Yes, I think that's probably the safest trade right now. I mean, obviously, when there are more deals coming, I will be looking elsewhere as well. There's no doubt. I think a deal between, Russia and Ukraine, for example, I think that is bullish for the Polish zloty, right? Because the reconstruction of Ukraine is going to basically be a big boost for the Polish economy, because you're talking about hundreds of billions of dollars will have to go into basically Ukraine, and then most likely a lot of companies are going to be setting up their bases in Poland for this direct investment. So I think Poland probably can do well, but again, Euro Swiss I think could be a potentially another beneficiary. But in general, there are a lot of currencies I like. I like Indonesian rupee, for example. I think Indonesia is a good example how good populism can serve a country very well. Indonesia has done very well. Has been able to grow 5% every year for the last 5 years. Jokowi just basically handed power to his defense minister, who also chose Jokowi's son as his vice president, we can talk here about basically whatever democracy, but the point here is that I think, Indonesia voted for continuity. And I think from that point of view, I think Indonesia is a very big country. It's a very attractive carry. And then I think, in that sense, in the geopolitically, polarized world, they're going to be able to play both sides and do well. And I think, so from that point of view, I like the Indonesia rupee as well.
Quick comment, David, on the commodity markets, and in particular, maybe oil and gold, where we've seen, gold has really taken off this last year.
Yeah, I'll tell you, this is what I think, okay? I think on oil, I've got a pretty strong view, because my view is this, right? I mean, while Trump tries to, patch things up with Putin, with Xi, and so on and so forth, in order to make America great again. My whole point is this: Trump is not going to sell out to the U.S. In my view, there's a way for Trump to make America great again and to stop World War III at the same time, okay? That's sort of like my positive message for the world in 2025. But there is no doubt that the issue with Iran, okay, does not have a diplomatic solution, in my view, okay? In fact, Iran has lost everything, okay, with the toppling of the Bashar al-Assad government in Syria last week. And in my view, that Iran and its mullah regime is now probably feeling very insecure. In fact, I would argue that they now have a very compelling incentive to make a run for nuclear immunity, because we know they're only a couple of weeks away from basically making multiple nuclear bombs at this point. Now, obviously, the issue with that, Iran becoming nuclear, is that Trump won't allow it, and nor will Israel, of course. Moreover, Trump has said, I mean, there's no doubt, Trump wants to stop Iran's economic lifeline. Iran is currently exporting 1.8 million barrels of oil per day. That happened under Biden. That's why Biden was the worst president of the United States in a very long time. And to the extent he empowered Iran and empowered all of Iran's basically proxies. In that sense, Biden's got blood on his hand. But the point here is this: Iran at this point, okay, produces 1.8 million barrels per day. Now, I don't think Trump wants to come in on January 20th and immediately, basically, I don't know, order an attack on Iran and oil prices go up $20 a barrel, go to 100 and the stock market collapses. I don't think Trump wants that, okay? I think more likely Trump will want Israel to do the dirty job before his inauguration, okay? I think, therefore, there's at least a 25% chance Israel will launch another attack on Iran before the inauguration, that is before January 20th. I'm not saying it's a 100% chance. I'm not even saying it's 50% chance. I think there's a 25% chance this happening. And the next attack will be much more dramatic, will be much more targeting the oil sector, okay? And I think, and this is why in the very short term, I think oil's got upside. But going to next year, once this Iran risk has been taken out, I'm very bearish oil, because I think not only US oil production is going to go through the roof, you're going to see a lot of non-OPEC producers stepping up to play. And I'm hopeful that Europe can pass things up with Russia. So Russian supply will come back into the market and help drive down energy prices for Europe, so the European economy gets basically a boost. All of that is, so from that point of view, my favorite trade in terms of oil is to basically buy the February, okay, Brent future, but to sell the December Brent future, December 25 Brent futures. So I think the long end of the market is too rich, but I think the front end of the market is too cheap.
Okay. David, before we say goodbye, is there anything that we've overlooked? Is there anything that you think, this is actually a really interesting tidbit that we haven't spoken about?
No, I think we've covered everything.
Okay. David, thank you so much for being with us today, and look forward to talking again, hopefully sometime in the near future. Thank you, David Wu.
Thanks for having me.
Thank you.